Thank you, JEC. Waiting on YouTube? Okay, here we go. Hello, everyone. Welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. Now, I have a two-step process for trading. The first step is planning, and I use positional analysis, and I look at how traders and market makers are positioned in the options market to develop a thesis for the day regarding the expected trading range and volatility volatility as well as a directional bias. And the second step in my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And on-topic questions and comments are welcome. And I will be watching the chat in Options-Dog in Discord, as well as the YouTube chat for questions and comments. And again, these are the focus, these are the topics that I'm going to be talking about: options, order flow, and the influence of options markets on stocks and futures. All right, let's get started. And it's certainly been an interesting week. So first of all, today I want to wrap up coverage talking about the news and events, economic data today, and then I'll touch briefly on events coming up next week. Then we'll go through our positional analysis, and then finally I'll talk about some setups. So today, the employment situation report came out at 8:30 a.m. Eastern Time. And this is the data. I guess the main thing is the non-farm payrolls employment situation report came in higher than forecast, and the employment rate came in a little bit higher than forecast as well, unemployment rate. So that's the data this morning. Initially, the market had a positive reaction to it and has gradually trended lower since then. So that's the end of the economic data this week. And next week, there's quite a bit of data coming out, primarily the CPI and PPI. And then on Friday is the big March monthly expiration. So that is the end of the month, and typically the quarterly expirations are the big important ones. All right, and given the PPI and CPI data coming out next week, I would certainly expect volatility to remain bid up into those events. All right, let's take a look at our charts now. We'll start our positional analysis. So this is the S&P 500 futures, ES futures. And before I dig into this chart, I'm going to take a look at a higher time frame. I'm going to start with whoops, that's the wrong chart. Here it is. So this is the chart that I want to take a look at. This is SPX, just showing price and spot gamma levels. These are the key gamma levels. These levels are provided in a ThinkScript to Spotgamma subscribers, in a variety of platforms, and I'll show these levels in Thinkorswim and in Bookmap. And this is showing again just price and levels for SPX, and the levels that are in play. I thought I had my pen tool open. Okay, here we go. So the levels that are in play, earlier today, the put wall. So that's the SPX put wall at 3,900. Here is the key gamma strike or absolute gamma strike at 4,000, and the volatility trigger also at 4,000. And then the call wall remains up here at 4,200. And you can see clearly that SPX has broken down below the put wall. And normally that level can be expected to act as support. And the next level in play is the 3850 level, and that's an L4 level, meaning it is not as significant. The range of significance for these gamma levels is 1 to 4, and 1 being the highest, most important, most gamma, and 5 being the lowest. But that is the next level that's in play, and it looks like SPX is almost there. All right, let's take a look at, so that is a 20-day 1-hour chart. Let's take a closer look, and this is the again a Thinkorswim chart showing SPX 1 day, 1 minute, so we can highlight the levels that are in play for today. And again, here's that 3,900 level, the put wall, and we'll see in Bookmap that a good bit of the volume today was concentrated at this level. And then finally, around 12:30, 12:45, price broke below that level and is now heading for this 3852 combo L3 level and the 3850 L4 level. So those are the next levels in play. All right, let's take a look at Bookmap now. And this shows the levels on this chart as well. These are provided to Spotgamma subscribers in Cloud Notes, which are updated automatically. And this is showing the key levels for SPX. And Spotgamma is still using a 5-point difference between SPX and ES, and I calculated it today is closer to 1 point. So I've marked my levels just a little bit differently. So another thing shown in the Spotgamma Cloud Notes are these combo levels, which combine SPY and SPX levels into one level, and then they're converted to an equivalent SPX number, and then shown on the chart converted to an equivalent ES number. All right, then I have my own Cloud Notes, and I'm going to let me just scroll up here a bit so we can see what's going on right now. So I have my own Cloud Notes, the C levels, and I'm showing, first of all, SPY levels here. So that's the SPY 390 put wall key gamma strike. And then this, it's hard to see, this white bar here is actually the 3850 level at I think a more accurate level. And then I'm also showing the ES round number levels, the 50s and the zeros. So those are the levels that are in play now. Let me recenter this. So this was the initial reaction to the data this morning. Bullish, then a move lower, then a retest of that high, and then now finally this is resolving to a move lower, a drop below the 3,900 level, also the SPY 390 level, and that's important. Dropping below the SPY and SPX put walls, and now headed towards the 3850 level. Okay, so those are the levels that are in play for today, and let's talk about shifts in levels now. So for SPX, there were actually no shifts in levels. The volatility trigger, put wall, call wall, and key gamma strike all remain at the levels they were yesterday. So that is the 4,000 level for volatility trigger and key gamma strike, 3,900 for the put wall, and 4,200 for the call wall. And I'll talk more when we look at the gamma levels charts. I'll talk more about it, the levels and what they are and what they mean. Now, on the other hand, there are quite a few shifts for SPY and for QQQ. So for SPY, the volatility trigger actually increased from 400 to 402, and the put wall remains the same at 390, and you can see that on the chart. And then the key gamma strike dropped down from 400 to 390, and the call wall also dropped down from 405 to 397. And then for QQQ, the put wall dropped from 290 to 285, and the key gamma strike dropped from 300 to 290. So I interpret all of that as bearish. All right, let's take a look at the gamma charts now. So these are the absolute gamma levels, and we can see where these levels come from. And there's a comment in YouTube, sound is low. I'm sorry, there's no adjustment that I can make on my microphone. It's positioned right in front of my face. There was a comment about that yesterday. Most people thought that the volume is okay, so sorry about that. Again, there's nothing that I can do. No change in any setting. All right, so these are the absolute gamma levels for SPX. And what this is showing, here's the zero line. So this is call gamma or positive gamma above, shown by the black bars. And below is put gamma or negative gamma, shown by the teal bars. So here's SPX, there's the 4,000 key gamma strike, and that's also the volatility trigger. So the key gamma strike or absolute gamma strike is the strike with the largest absolute gamma, and that can act as support and resistance and as a magnet. Then the put wall is the strike with the largest net negative gamma, and that can be expected to act as support, and it normally does. And then the call wall, so that's 3,900 for the put wall, 4,000 for the key gamma strike, also the volatility trigger, which is Spotgamma's proprietary gamma flip level, and indicating that below that level, traders are long puts, market makers are short puts. That puts them in a negative gamma environment, and in a negative gamma environment, they have to sell futures to hedge their delta exposure, as price decreases, and that tends to increase volatility in a negative gamma environment, and that is certainly what's going on today. I'll talk more about this, and actually I can do that right now. So this, what's happening, there was a comment in the Spotgamma AM Founders Note this morning about a negative gamma Vanna feedback loop. So what happens, and this was happening yesterday as price was falling, and it also looks like it's happening today. As price falls, see all these puts, all this negative gamma below 4,000, all these puts, again, traders are long puts, market makers are short puts, and as price decreases and volatility increases, and let's take a look at the VIX for today, and we can see that so VIX is very high today. It's higher than it has been. I'd have to check. This may be the highest it's been all year. With this very high VIX, all of these puts that are in the money, implied volatility increases, price drops, and all of those puts become deeper in the money. They're gaining values due to the drop in price and the increase in applied volatility, and that means that market makers have to just continue to hedge. As price drops, they're selling more futures. Price drops more, they're selling more futures to hedge their delta exposure. Now there will be an end to that, and we can take a look at that actually. Down here, here's the gamma model for SPX, and this is showing as price approaches, let's say 3,600 to 3,700, that market makers need to hedge starts to decrease. Their gamma, this gamma level, levels off, and their hedging requirements will decrease. But until that time, this negative gamma is increasing, and we'll look at the Vanna charts in a minute too. And they need to continue to hedge, and that's the negative gamma Vanna feedback loop. Again, price continues to drop, implied volatility increases, puts are gaining in value, and market makers have to continue to hedge. So they're selling futures, and that just contributes to the move lower. All right, so I hope that answered that question about the negative gamma Vanna feedback loop. So let's get back to the SPX Vanna level, the absolute gamma level. So again, the thing to note is all of this put gamma, negative gamma below the 4,000 level. Let's take a look at SPY. So for SPY, again, remember the key gamma strike dropped from 400 to 390. So this is the key gamma strike. And that's also the put wall, the strike with the largest net negative gamma can be expected to act as support, although it's not today. And then 397, there it is, 397 is the call wall. That's the strike with the largest net positive gamma, and that can be expected to act as resistance. So JEC was my explanation of the negative gamma Vanna feedback loop. Did that answer the question? All right, so anyway, those are the SPY levels, and again, note the dominance of put gamma below below the 400 level. And we'll see that when we look at the gamma notional and also the Vanna charts. All right, let's take a look at the combo levels. And this is the combination of SPX and SPY levels. And this is the, again, for SPX. And we'll see here this is all put gamma below the 4,000 level. And that's the volatility trigger, the gamma flip level. And we can see it clearly here. And there's a huge dominance of put gamma here. So that's in terms of SPX price. Take a look at it in terms of SPY. And that's the 400 level, 399. So the volatility trigger for SPY is at 402. Okay, those are the gamma levels. Let's take a look at the NASDAQ now. And this is QQQ. This is what we look at for NASDAQ. And for QQQ, the key gamma strike is now at 290, strike with the largest absolute gamma. And then the put wall, and that had dropped down from 300 yesterday. And then the put wall is at 285, strike with the largest net negative gamma. And then the call wall remains at 310 here. And again, note the dominance of a put gamma below 300. All right, let's take a look at data now. And I like to focus on this gamma notional. This is market maker's position on the gamma curve. And this left column is showing SPX. The middle column is SPY. And the far right column is QQQ. And these numbers are quite negative. I don't know if last year in the bear market, I don't know if I saw numbers this negative. I'd have to go back and scan through my my trading journal. So again, this is market maker's position on the gamma curve. In a negative gamma environment, this means that traders are long puts, market makers are short puts, and they have to hedge with price to hedge their delta exposure. So this means as price is falling, that again, that negative Vanna gamma feedback loop comes into play, and market makers have to sell futures. And this can also work the other way around. If price is increasing, especially with such large numbers here, if price increases, implied volatility drops, market makers can buy back their short futures, and that we've talked about that before, a put Vanna rally, and that could potentially happen next week if the CPI, PPI numbers are not as bad as expected. Note today that traders with VIX at, the last time we looked, at 28 are paying crazy high prices for protection. And if that doesn't pay off, if there's any drop in implied volatility, those puts will start to lose value. Market makers, traders most likely will get out of their puts. They'll monetize their puts, and market makers' delta exposure will decrease, and they can buy back their short futures. And that's again what we've talked about before, a put Vanna rally, and that's always a potential, especially with negative gamma this high. And Alex in YouTube asked, how current is this data updated? And it's updated in the morning note and the PM note. And I compare these values from morning to morning. So most of the data that we're looking at in our positional analysis is static data. And Spotgamma does provide real-time data with Hero, but this is static data. A lot of it is based on open interest, which is updated once daily sometime during the night. So this is static data that's updated, most of it once a day. So these numbers did become more negative from yesterday. So yesterday SPX gamma notional was minus 429. Today it's minus 932. And yesterday SPY gamma notional was minus 2026, and today it's minus 2809. Again, extremely negative. And then for QQQ gamma notional, yesterday was minus 506, and today it's minus 752. All right, let's take a look at the Vanna charts now, and this will show a graphical illustration of what I was just talking about. And this chart shows market makers delta notional on the vertical axis and strike price on the horizontal axis, and it shows how their delta notional changes with changes in price and implied volatility, and that's shown by the green curve for the current expiration. And that green curve is showing the Vanna effect, the change in delta notional with a change in implied volatility. And this is clearly showing that as price decreases, market makers' delta notional, delta exposure increases, and they want to remain delta neutral, so they have to sell futures to hedge their delta exposure. And again, that works the other way around. If price increases, they can buy back their short futures, and that can spark a put Vanna rally. But we're seeing so far today, the negative gamma Vanna feedback loop rather than a put Vanna rally. All right, and then this black line is the next expiration, and that shows how market makers' delta exposure changes as time passes, and that's the charm effect, the change in delta as time passes. So that's SPX. Here's SPY. The line's even steeper. Again, remember the gamma notional for SPY is about 3 times the size of SPX. And there's a QQQ. So all quite negative today. And in this type of environment, negative gamma environment, you can typically expect higher volatility. And up until yesterday, really, the 0 DTE options traders in SPX and SPY have tended to sell highs and buy lows, and that has suppressed volatility. And that worked a little bit this morning and a little bit yesterday morning. But the last time I checked, I looked at Hero, that was not the case. Okay, last thing that I want to take a look at before we take a look at some setups. This is my key gamma strike list, and I keep track of the key gamma strike. That's one of the 5 Spotgamma key daily levels, and I just use this as a quick reference. So this is in the E column, the far right column, showing the key gamma strike from yesterday, and then the D column, current key gamma strike, is showing the key gamma strike from today. And I note the changes with just a simple red or green. So red indicates that the price decreased from the previous day. So here you can see for NVIDIA, the price decreased from 240 yesterday to 230 today. And I think the most notable is the drop lower in the key gamma strike for both QQQ and SPY, and then also the quite a large increase for VIX there, showing an interest in calls at much higher levels. So for the indices, again, I interpret this as bearish, but it's also notable that for most of the stocks, other than NVIDIA, there was no change in the key gamma strike. So I interpret that for most of these stocks as neutral to bullish, given the large drop yesterday, especially in the indices, that there were NVIDIA was the only one that had a drop in the key gamma strike, and it's pretty volatile. That key gamma strike changes almost daily for NVIDIA. Changes quite frequently. All right, so that is that's my planning process for the day, and what has paid off really in the last few days is just to get a feel for an understanding of how market makers are positioned, and then watching the real-time order flow and real-time order flow, real-time hedging flow, and also having the levels in place. All right, so let's take a look now at Hero. And this is the SPX plus SPY that I'm looking at right here. And we'll start with this. And this is showing the options trades for SPX and SPY in one combined signal. And I use this whether I'm trading ES futures, SPY, or SPX. And whatever I'm trading, options, futures, shares. All right, let's actually take a look at Bookmap first to get a framework of what's going on here. So it looks like this 3850 level may be acting as support. We can see the shift in order flow here. A lot of green dots, market buy orders coming in. I'm going to zoom in on this level, and let's scroll up just a little bit. All right, interesting to note, and this is pretty typical behavior of larger traders, or these iceberg orders. These are CME order types, icebergs, that large traders use to hide their size. And these are pretty large. So this is indicating, for example, down there at 3850, 5,212 contracts traded, iceberg orders, in 4 separate transactions. And you can see that also by this rising light blue line here. It's actually been increasing. And this is, again, larger traders. They use iceberg orders to hide their size, and they trade differently from retail traders. They can, they don't typically use a tight stop loss, and they can withstand some pain, and they will often sell strength and buy weakness. All right, so that's what's going on now. So let's go back and take a look at Hero now, and this will show what options traders are doing. And this is kind of odd right here, this large bar. So I'm going to just scroll a little bit to the left. So that's out of the picture. And what this is showing, and we'll look at these 0 DTE options as well, which also provides a clear picture. And this is showing that options traders here were taking negative delta positions, positive delta, negative delta, and notice when they're doing that. So here at this higher level here, right at the open, they start selling futures or selling or taking negative delta positions. Price moves lower, and as price reaches a lower level, they start taking positive delta positions, and then as price moves up, and this is more of a divergent setup here, right around 10 a.m. Traders, as price moves up, they start taking negative delta positions, and price moves lower. So this is the divergent setup. There was a good conversation in a good discussion in Discord this morning about this. And one thing that I mentioned, it's important to note the difference in the way that traders are trading the S&P 500 versus single stocks, for example. And this is pretty typical behavior of contrarian traders selling highs and buying lows. And this is something that I really like about trading the S&P 500. It's been very prevalent this week. Traders will, with the options market, they will again sell highs, take negative delta positions, and as price moves lower, they will start to take positive delta positions, and then price responds sometime later. So divergent setups up and down. Now this is the showing all expirations with this purple line. So for those of you who might not be familiar with this, white is the price action. This is for, it's shown in terms of SPX here. You can tell from the price axis, the vertical axis. This is HERO, the hedging impact of real-time options. Again, showing options trades for SPX and SPY, all expirations, calls, and puts. And HERO allows us to look at this in a little bit closer detail, so we can take a look at what the 0 DTE options traders are doing. Zoom on, kind of get back to the same time frame we were looking at, and this shows the divergences a little bit more clearly. So these are traders that are trading options that expire today, and I like to look at this as well as the total signal. So again, this is still SPX plus SPY, but showing options trades that expire today, and these traders, zero DTE options traders, have been driving price higher and lower, and I've shown a number of examples of this week, and this is a very good signal if you're trading the S&P 500. Notice that traders start taking positive delta positions, and about 10 minutes later price responds, and here they start, as price moves up, they start taking negative delta positions, and then price responds, and then the same. And that's the divergent setup that is quite prevalent in the S&P 500. Let's zoom all the way out. This, I don't know what this bar is. This could be bad data. Or actually, there's something odd going on with this chart. It looks like there's a gap in price. I think that may be, let me refresh this page. Let's get my watch list here. Yeah, all right, that's better. I needed to refresh that page. So let's go back now. And you can see the kind of the contrarian behavior this morning, and then around 11:30, and this seems like it was just like this yesterday. then the buyers didn't really come in until the 38.50 level. Let's see what the 0 DTE options traders were doing. All right, so here's the kind of the morning session with the up and down, and then around 11:30 or 12. Oops, wrong tool. Then price starts to move lower until another key level there, the 38.50. So RJ asked, could you explain the 38.50 level? And that's a spot, SPX, I'm sorry, SPX 38.50, and you can expect those big round numbers in SPX to be key gamma levels. And let's just go, we'll take a quick look at the gamma charts again. Go back up to SPX. And there's 38.50. So notice the gamma concentrated at the zeros and the 50s. RJ asked, is the current market behavior an example of the Vanna feedback loop you were speaking of? So the Vanna feedback loop is the drop in price. And let's go back. Let's take a look at Bookmap now. So, yes, there's your negative gamma Vanna feedback loop. Price drops, and we can take a look. So this is at 11:30 a.m. Interesting. That's, I think that may be the European close as well. And you can see in Bookmap the clear shift in order flow. Green dots, market buy orders, then the shift to sellers, market sell orders, aggressive sellers, move price down, a recheck of the 3,900, 390 level, and then a move down to the 38.50 level. And notice, because the right now the options rollover is next week, so we're so close to rollover that the SPX price is very close, just about 1 point different than the ES level, and that will widen out at the rollover. All right, so there's again the negative gamma Vanna feedback loop, and let's take a look and see what VIX was doing at that time. And this is just a proxy for implied volatility. So here at, let me just zoom in on today. So you can see right at 11:30 here that VIX starts to increase, starts making higher lows at the same time. So price dropping, implied volatility increases. Those puts are gaining in value. All right, so that's the S&P 500. Let's move on and take a look at some stocks. Let's just go back to all expirations. So again, this is one reason I'd really like to trade the S&P 500, looking for these divergences, especially in the morning. All right, let's take a look at some stocks. And the first one, let's take a look at Tesla. And this is going to illustrate I think the difference between the S&P 500 and single stock. And Tesla is the stock that I look at most often for a very strong correlation between options trades, hedging flow, and price action. And this is kind of unusual this morning, but it made for a great long setup. And notice here the price is falling, but Hero remains neutral to slightly bullish. So traders are taking positive delta positions, and let's see what they're doing. We can take a look at puts and calls. So they're selling puts and buying calls. And then let's take a look at Bookmap now. Let's go back. Let's go to Tesla now. And this was, let's just zoom in so we can see this. Just a very clear signal. So remember, price was dropping, but options traders started selling puts and buying calls. Price drops down to this 170 put wall, the level that you expect to act as support. Price drops down just below, which is pretty typical of a very volatile stock like Tesla, but then reverses higher. Note the shift in order flow, and this is shown by the cumulative volume delta. Shift from bearish to bullish. You can see that clearly in the order flow here. All the pink dots, market sell orders. This buy sweep comes in these very small green dots, as well as the aggressive buyers with the larger green dots there. Those are buy minus sell, so more buyers than sellers there, taking price up at the reversal from the 170 put wall, a level again that you expect to act as support. So you have the Hero divergence confirmation, a change in order flow, a reversal at a level that you expect to act as support, and then a move up to liquidity targets above. The first is the 175 level, and then the next target up would be the 177 hedge wall, and then finally, if price continues up, and we'll zoom out in just a second. I don't think it did. So anyway, that's that. I thought that was the easiest to read setup of the day. So this is what I prefer to trade, the S&P 500, because of the divergence setups and all the levels that are in play that somewhat I think provide a roadmap for the day. And then Tesla, the clear typical confirmation between hedging flow and order flow and price action. So now on if the market was more bullish today, I would certainly expect that 180 key gamma strike to be in play today, but it looks like it probably won't get there today. But anyway, great bullish setup this morning up to the 175 and finally up to the 178 level. And the thing that's great about stocks is all these liquidity levels. This is above the price here. These are passive sell orders. These are limit sell orders in the order book, and these often act as a price target. All right, there's another question in YouTube, getting the sound louder. I'm sorry, I don't know what to do. I'll check later, but there's no, as far as I know, there's no adjustment. I have the microphone right in front of my mouth. I don't know of any way to change the gain in my in my microphone. I haven't had any complaints in Discord, so anybody watching in YouTube, I urge you to try our Discord channel. Bookmap Discord is free and open to all, whether you have a Bookmap subscription or not. And we have a great discussion in the Options-Doug chat channel, and there are also many other channels for future stocks, 6 different languages, crypto. So if you're not in Discord, I highly recommend it for the great content. Okay, so I'm getting a lot of confirmation that the sound is okay. So it could be your sound settings, the folks that are having problems with volume. All right, let's take a quick look at some other stocks. And I did most of my prep here in the morning, and so I was looking at some long setups here. This is AMD, and note the difference in order flow between in what was shown in both the S&P 500, the pretty clear shift between green dots on the way up, pink dots on the way down, as well as the clear difference in Tesla, and that's not really apparent in AMD, and that makes for me that makes taking a long in AMD a little bit more difficult. Although let's take a look at Hero now. Let's go back to the total signal, and we'll take a look at AMD. And this is what I saw in the morning. So here is a divergence long. Notice that Hero starts rising, and then price responds, dips down, giving you a good pullback entry here right around 1050, and continues higher as Hero continues higher without any dip really. So around 1050 was a good pullback setup. So in this case, this is showing that how hedging flow tends to drive AMD. So let's go back and take a look at Bookmap again. And there's that initial setup around 1030, and then here is the 1050 pullback signal with a nice price target up here at the 85 key gamma strike. And note the liquidity at that level that has been in the order book since the RTH open. And this is pretty good range for AMD today. You could have gotten over 2 points on that. All right, the next one, and we'll move through quickly. I saw a divergence long. Let's take a look at Hero. Let's go to Amazon. And I saw this as a divergence long. There was a slight dip in Hero, starts to move higher, but overall making higher highs. Price moves down, a more shallow dip in Hero, and then price moves up. Let's go look at Bookmap. So there's Amazon. And the shift in order flow is somewhat apparent there. definitely a sweep into this 91 level. Buyers absorb the sellers, price moves higher. And since then, price has reversed back down to that level. Let's go back and take a look at Bookmap. And there's the, so it's kind of hard to read the total picture here. You can, if you zoom in a little bit, you can see that as Hero moves lower, there's a very strong correlation between options trades, hedging flow, and price action. All right, the next one, Microsoft. Confirmation long. Starting just before 10 a.m. Then a pullback around 10:30. Then a move higher. Let's go take a look at Bookmap. Microsoft. So there is the long setup. Pullbacks, deep pullbacks, 1 or 2 points. And price moved through the 250 put wall key gamma strike. And now has reversed lower with everything else. And let's take a look at NVIDIA. Let's go take a look at Hero. Here's NVIDIA. NVIDIA has typically a pretty strong correlation between hedging flow and price action. And strong correlation with his down move. Hero levels off, then options traders come in, and there's the real long setup, this pullback down around 1020, and then options traders start taking negative delta positions, price moves lower. And let's go take a look at Bookmap again. So there's the move higher, the pullbacks. And notice NVIDIA is pretty volatile, so it makes pretty deep pullbacks. Here's a 3-point pullback, for example, 1.5, almost 2 points. Price target for the long at the 235 hedge wall. And let's take a look at QQQ. And pretty strong correlation between hedging flow and price action with QQQ. Long setup in the morning. And Hero levels off, finally drops, and price follows. Now it looks like options traders are coming in now and starting to take positive delta positions as QQQ is down. Let's see where QQQ is. Take a look at Bookmap. Down around 290, 289, 288. Note the shift in order flow. A lot of aggressive buyers coming in. You can see that with all the green dots. All right, let me check for questions. And Mike says, I even changed the color of my dots to match yours. Love it. I try very hard to make my charts as clear and as visible as possible, not only for presentations, but for my own use. And I changed the default color of these pink dots, the market sell orders, to this kind of bright pink, which I think stands out a lot easier than the kind of the default orange, red, brownish color that seemed to kind of get lost with the heat map. So this pink really stands out rather than the color before, which was something like this color, and that did not, that kind of blended in with the heat map. So I changed that. I think that kept the green probably the same or pretty close. But I like these bright colors. I really like having my charts as easy to read as possible. Okay, let me check for questions in Discord, and then we'll wrap it up. So yeah, JEC says 2 points in AMD is a great day. Yeah, recently AMD, a lower price stock, 2 points is a good move. And Truman notes AMD seems to reverse down around 12 o'clock. I think that's been pretty typical of many stocks. And RJ asked, does Spotgamma standard have the hero indicator data? It does not. So I think Spotgamma provides 3 levels, subscription levels: standard, pro, and alpha. And you go check the Spotgamma website to be sure. The standard is everything except the equity hub, and then alpha includes equity hub and hero, and I use both of those tools extensively. So again, check on the Spotgamma website, and they do offer a 7-day trial. Okay, thank you, JEC. So that he posted that from the Spotgamma website, describing the differences in the 3 subscription levels. So if you want hero, you need alpha. Okay, so the question on the setting on my liquidity colors. So I don't know if you mean the volume dots that I was just talking about. So you can just right click on a dot here. Background. So he's indicate background. Let's see. I'm just using the default for. If you mean the heat map, I'm just using the defaults. I don't think you can change that like the volume dots. So I just have the standard settings, default settings for most of the heat map. Now I have changed the cutoff settings, cutoff percentage. So I hope that answers your question. I'm just using this. There are 3 settings for the colors, and I'm using the one on the bottom, the one that has the most colors. So Alex, I hope that answers your question. And all I've done to adjust the the heat map is change these sliders to suit my preference, and for most everything I have tamed this down to get rid of the noise and clutter. And for some stocks, especially for QQQ and SPY, there's just a cloud of liquidity shown on the charts if you don't tone that down just to show the most important, the highest liquidity. So the same for SPY. All right, Noah, you're welcome. Have a great weekend as well. And RT asked, does Spotgamma provide thinkorswim script for all stocks? Or do they have just SPX? So I think they have one think script that, and let's take a look here. One think script for SPX, NDX, RUT, SPY, QQQ, and IWM. Let's just take a look. So here's the script. There it is for SPY. I don't know if you can read that or not. That's light gray, but that's SPY, QQQ, NDX, NQ. So basically just the indices. All right, so it looks like that 3850 level around there so far has acted as support. All right, that is all I had. I think I've answered all your questions. I want to thank everyone for watching today. Thanks for your questions and comments. And I will see you next week. Have a great weekend, everyone. Thanks again. Bye.